Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be going over my M1 Finance portfolio that's mostly focused on quote-unquote growth stocks. And over the past month it's been a pretty interesting month for more growth-focused stocks. So let's just get right into it and check out where it's at. Right now we're right under $600, about $594.24. And as you can see, we've obviously steadily been going up as we've deposited money, but over the past week, it's been generally down. We're up over $600. If we looked at the month, it's generally been down since our last deposit. So that is interesting to see. Actually, the portfolio is all the way up at $641, so we're really down like $50 since then, which is pretty interesting to see. But if we look at the individual slices here, that's how you can split up your investments. These are the companies we own, and actually, let's look first at the activity of the portfolio since the last time we talked. So last time we looked at this portfolio was probably somewhere around here at the end of October. So like always, we just deposit $10 every single Monday, and slowly that builds up over time. And at the beginning of November, we did get a referral bonus of $50. So super grateful for whoever signed up. I'm sure you are as well, as you got that little boost to your to the start of your portfolio. And if you guys do want to sign up, they do have this referral program to the end of the year. It is $50 again. So if you do sign up and deposit $100 in a regular brokerage account or $500 in a Roth IRA, then you will get $50 extra basically into that account, and I'll get that as well. So that's super awesome program they have going on, and M1 Finance, in my opinion, is a great platform as well. So definitely not a bad idea to open an account, especially if you're interested in starting investing. So because of that referral bonus and that additional deposits, we actually bought about $80 worth of stock on November 8th. So that was super exciting. Obviously, we just bought most of the companies in the portfolio, and the one that was excluded was Spotify, and I think that's because it was below $1. So that's unfortunate, but it's fine. We bought these 11 companies here, and about $5 or $10 of most of them. And then we also got a 3-cent dividend from MasterCard, which is pretty exciting. I remember, even though it's only 3 cents, it has grown a lot. At the beginning of the year, we were only getting 1-cent dividends from MasterCard. So it definitely has grown. And we just made these deposits as well every single Monday, like I said. So going back to the actual value of the portfolio, around $594, and these are the companies or ETFs. So the first one, Vanguard Information Technology ETF, VGT. It's about 18% of the portfolio right now, doing pretty well as technology just continues to do well over time. And just investing in a solid index fund like this will never go wrong. Well, I won't say it will never go wrong, but over the long term, you're going to do well investing in a solid index fund like this. The next one here, Shopify, definitely with e-commerce. Over the past few years, they have exploded, and I expect them to continue growing pretty rapidly. And I think they are a pretty interesting company and just doing some cool stuff in the e-commerce space and really pushing the envelope there. So that's about 10% of their portfolio right now. The next one, Amazon, obviously they are big into e-commerce as well, but they also have, that Amazon Web Services side as well, which is pretty cool. That's about 10% of the portfolio as well. Then this ARK-K, this is the ARK Innovation ETF. Honestly, over the last year, I have become less and less a fan of ARK, but it's still, a solid holding. It's not terrible, has not performed very well since the beginning of the year at all. And mainly that's not because the companies themselves are not good companies, I think, for the most part. I think for the most part, it's because the companies that this company owns were largely overvalued, very much so, and overhyped at the beginning of the year. And I would say some of them are probably a fair bit overvalued right now still. But less so than they were at the beginning of the year. So that's about 9% of the portfolio. The next one, Google, Alphabet company, whatever you want to call it. But that's about 9% of the portfolio, and they have been doing very well. Obviously, they own the top 2 largest search engines in the world, Google and YouTube, which you're probably watching this on YouTube right now. So that's pretty cool. and they are about 9% of the portfolio and have been performing very well for me. Tesla is next, about 8% of the portfolio. Not much needs to be said about this one, but they have been doing very well the past 2 months. If we just look at the past month, I guess, well, the past quarter, because it was at the beginning of November, end of October, that they had this big run up. Now over $1 trillion market cap, which is pretty cool to see as well. And going back here, this one is about 10% of the portfolio, 8% of the portfolio, sorry. The next one here, PayPal, is around 8% as well. They have not been doing very well. I did not really look into it too deeply, but they just were probably overvalued at the beginning of the year when I started buying them, and so I have a little bit higher average cost than I want. But for this type of portfolio, I'm okay with that, and over the long term, I think I'll do well. And I really just don't have enough knowledge of all of these companies, I would say, to be buying them at the best prices, and so I just want to own them and benefit from the returns over the long term. And as long as I get a pretty decent price, I will definitely be happy with that. And the next one here, Adobe, pretty much flat on my investment for them, but they are 5% of the portfolio as well. MasterCard and Visa, both around 5% of the portfolio. And these ones have been hit hard the last few weeks. And Visa in particular, I think there was news recently that Amazon was not going to accept any Visa cards for their UK services, or UK e-commerce basically. So that also kind of tanked the stock a little bit, but again, over the long term, these companies are going to be doing some incredible things as payments become more and more online and digital than ever before. And Square is also benefiting from that with payment processing. They are about 5% of the portfolio as well. And then Spotify here, about 5% of the portfolio. Obviously, they have a lot of great services for their music, but they also have a lot of great podcasters that they've been bringing on that are sort of exclusive to their platform, which I think is a really good move, as podcasts are just getting more and more popular these days. So they're up about 12% for me. And then finally here, Jumia, the big loser, like I've said in the past. This one is about 5% of the portfolio, or sorry, 3.7% of the portfolio. And it is right around $22 right now. So those are my basic positions, and actually these last few I talked about, the returns were a little bit skewed. Yeah, so if we look at these are more accurate now. So PayPal down about 56%. I think that's where it changed when I was switching to the other time views on Tesla. And that's the thing about M1 Finance, that their returns are time weighted. So it actually changes based on what time frame you're looking at, which I think is, in another way to look at it, but I don't like it as well, or as much at least. So for me, it's easier to go in here and look at the actual value and say, well, my cost for this position is about $63, and right now it's around $46. So that's in reality less than 33% down, whereas M1 Finance says that it's down 56%. Based on the time-weighted return. So these numbers can be a bit skewed, basically, since I've been investing less than a year in this portfolio. All the returns are going to seem larger, basically, on a time-weighted basis, and over time, those will go down as I've been investing for a longer time. I guess we could look on the year, 1 year. Once I go over a year, I can just look at the past year, and that should be a little bit more accurate. But overall, I'm happy with where this portfolio is at. And sorry for rambling about the returns, but that's just a little bit of nuance that kind of annoys me about M1 Finance. But the rest of their platform is pretty nice, and I do like using it, especially for these companies that I just don't want to pay as much attention to. I just want to let them do their thing, and let M1 Finance take $10 out of my bank account every week and invest that into this portfolio, and over time generate me some nice returns. So thanks for watching the video. Let me know if you do have any other growth stocks in mind that you would suggest, or that you do own, or maybe that are even at a good valuation right now, because growth stocks and good valuation normally don't really fit into the same sentence together. So I'd love to hear any suggestions you guys have, and I will see you in the next one.